On the market, somewhat unfazed by those recent comments from the president about the deal being on life support with Iran. The Dow little changed at this hour. The S&P up about 0.3%. The Nasdaq up by about 0.4% at this point in time. You can see the Russell up about 0.7% as well. Guys, this has been a huge run to the upside since March. And, everybody talks about the various superlatives that we've seen. And I have to wonder, against this backdrop of a very complex geopolitical environment, one where we're also seeing high oil prices, what do you think the sustainability is of the equity market rally at this point in time, Steve?
Yeah, look, I think there's no reason to doubt it because you've got so many headwinds. You've got the war, inflation is there, oil prices. Hey, look at it this way. It takes $1 billion to renovate one room, and not many people can afford that, right? Mm-hmm. So, I'm making light of it, but that's a real issue. Now, the issue is really for the 60% of the country, it's the paycheck to paycheck. And for them, as I mentioned last week, it is devastating. For the rest of the country, it's a nuisance and doesn't matter all that much. That's why consumer spending keeps going and going. Plus, you've got to make investments in AI right now, and that's really what's driving the whole market. If there were an AI bubble, I don't think the bubble is here yet. It'll get there because valuations, as they keep moving out, it's unsustainable. That'll be a problem, but that's not a problem for a couple of years, in my view. So you have to spend, or you risk the very existence of your company, particularly in some instances like software, being a real issue. So that's going to keep driving the market and lifting all ships. What didn't happen in the last sort of technology revolution, where companies like Corning had momentary moves up, but here you keep seeing announcement after announcement. So the whole undercurrent, the knock-on plays are what's driving it as well. Take a look at VRT, take a look at FTAI today, and we'll talk about some of the others. But those stocks, after where they've come from and how they keep going, it's mind-boggling.
Do you think it's broad-based enough, though, Surat? Because, yes, we are seeing a broadening out of moves to the upside, but it's still pretty narrow, especially when you consider stocks that don't have that traditional exposure to AI. You've got a lot of momentum in here. You've got a lot of retail investors kind of playing into the upside here. Sentiment seems to be a little bit dicey at this point in time.
It is, and it's kind of like, if you're not on the train, you got to get on it now for the momentum stocks. So, we know the Fab 7 were doing well. Now you get that second layer of the semiconductors that have done super well, right? Whether it's memory chips or it's now back in NVIDIA, and you can see kind of Qualcomm's up 10% today. And then you see kind of what Steve was talking about, the Vertivs and all the other companies that are supporting all this CapEx spend, right? But it's still very kind of linear. It's in one bucket. But the rest of the market does not seem to be coming along with it, whether it's in healthcare, financials had a run, they've kind of come back. So I think staples haven't really run. So you've got the generals kind of leading, but you either need them to come back, which hopefully which is not going to go for the market, or you want the rest of the market to come back. But given where oil prices are and the sustainability of the lower end consumer, that needs to be something that we really have to consider, because over time, every day that oil prices stay at these, you're going to see kind of companies saying, hey, Whirlpool had it. You're going to see some of the other companies McDonald's, you're going to see some softening of consumer spend. That will trickle through to retailers. That will trickle through to a lot of other places. And at that point, kind of the market really is so bifurcated.
Yeah, it really feels that way. And we'll get some retail earnings, I believe it is next week. But Shannon, you think about this and against this backdrop, and I know the jobs report number was decent on Friday, but we do hear these idiosyncratic layoff announcements from companies, and they say it's due to AI. And so how do you think about building an investment portfolio that on one side capitalizes on just this momentum we're seeing on the AI supply chain, while on the other side knowing that that's often at the expense of certain jobs and how that will play a role? Is it as simple as just, semis to the upside and retail, certain pockets of retail to the downside?
I think that there's probably an overstatement in terms of the next, 1 to 3 years in terms of AI disintermediation and the amount of layoffs that there are likely to be. And in fact, what you're seeing is that you're actually seeing, Steve made some points about lower income and higher income households. But on the cyclical side of the economy, on the industrial side of the economy, you're starting to see some reacceleration. If you look at things like freight numbers, if you look at PMIs, Fed surveys on the manufacturing side. So we are seeing this undercurrent of cyclical improvement that I think in some ways can potentially support continued job growth in the United States, even if we're seeing a, kind of significant deterioration in certain parts of the labor market. If you look at tech jobs, for instance, since November of 2022, off 11% in aggregate. Then you see government jobs, federal government jobs, off also 11% since their peak. So there are pockets of the labor market that are moving lower and potentially seeing that deterioration. You're seeing some stagnation in other parts of the labor market. I think the most important thing, though, is you're asking is this hardware trade on the tech side where you want to be? Is that where the momentum is going to be? I mean, we saw a bit of an unwind last Thursday, and this is really Joe's department, so I don't want to talk too much about momentum, but, we saw some cyclical unwind last Thursday. And so if you're looking at places like the consumer, there are probably areas where you can be selective, but if you're barbelling sort of this technology, utilities, continued AI growth trade with areas like energy and materials, industrials, do you have to go and bottom feed in consumer right now? Probably not, but can you pick up some of those quality companies that are more tied to the higher income cohort? I think that there are probably some buying opportunities, even with the run-up we've had in the broader market.
Yeah, Jefferies had this interesting report this morning. They call it the AI unicycle, and they show kind of how earnings-supported AI returns are really just driving the S&P this year, especially relative to everything else. And Joe, if you're an expert on momentum, you study this stuff. I mean, does this make you nervous at this point in time? Or if you're still sitting on the sidelines, is it not too late to get in there?
No, look, does it make me nervous? No. Does it make me understand that at some point we're going to have a massive intraday unwind in momentum? Absolutely. There's going to be a day, I said this last week, there will be a day where the momentum factor is down 4 to 5% in a very tight period of time. You're talking about the momentum factor being up 30% so far in the current quarter. The SMH is up 50% so far in the current quarter. So I think what's going on, to your point, is there's a fundamental acknowledgement in place right now that this new industry, and really we are creating a new industry if you think about it. Technologically, we are rapidly building out an entire new industry. And the fascinating part of it is the user engagement of it is at the very initial stages. So over the weekend, I was challenged by someone regarding my bullishness surrounding the momentum factor and the AI universe. And my response to the individual was, well, are you using Gemini, ChatGPT, or Claude? And they said, why would I use any of those? Case made. So I think what's happening now is enterprise and the consumer are finally recognizing the value in these tools. I believe the true value is in Claude, but Gemini is phenomenal as well. And the beginning stages of the usage, I think, is going to rapidly advance the growth of this industry, and it's going to be reflected in the earnings. And that's currently what's going on, 6 consecutive quarters of double-digit earnings growth, and we'll probably extend that to 7, 8, or 9. We can't end this conversation without noting, here we go, it's NVIDIA. In the last several days, it's been Amazon, Alphabet, Apple recording new all-time highs. Today we have NVIDIA, $5.4 trillion market cap for a company that hasn't even reported yet.